Have you ever wondered if there is a different way to file your taxes as a married couple, especially if your financial situations are a little different? It is a common question, and understanding your options can make a big difference for your family. Yes, absolutely. As a married couple, you and your spouse have the option to file separate tax returns rather than a joint one. This is known as the married filing separately status, and it is a perfectly valid choice under tax law. The core reason why some couples choose to file separately often comes down to individual financial circumstances and the impact on their tax liability. For example, if one spouse has significant medical expenses, itemizing those deductions might be more beneficial on a separate return. Another common reason is if one spouse is burdened with a large amount of student loan debt, as filing separately can sometimes help reduce their income-driven repayment plan calculations. It can also be a strategic move in situations where a spouse wants to avoid being jointly responsible for the other spouse's tax debt or errors. To decide if filing separately is right for you, consider running the numbers both ways. First, calculate your taxes as if you are filing jointly, and then calculate them as if you are filing separately. Think about each spouse's income, deductions, and credits. Ask yourselves if one spouse has a much higher adjusted gross income or significant itemized deductions that might be limited when filing jointly. It is also important to consider if you live in a community property state, as this can affect how income and expenses are divided. Keep in mind, choosing married filing separately means you generally cannot claim certain valuable tax benefits. These can include the Earned Income Tax Credit, the Child and Dependent Care Credit, or education credits. Additionally, if one spouse chooses to itemize their deductions, the other spouse must also itemize, even if their standard deduction would be higher. There are also specific rules about how certain income and expenses are allocated, especially for those in community property states like California or Texas. Ultimately, the goal is to make an informed choice that best suits your family's unique financial situation. By understanding the implications of each filing status, you can choose the path that potentially maximizes your tax savings and brings greater peace of mind to your tax journey.